really appreciate everybody who has given me their time today to come into the room and listen to what I have to say in this webinar. Before I start, I just wanted to let you know that we're at www.rightlinetrading.com, and there you can see a link to our daily net equity in the trading room. Our daily net equity for our crude, Russell, and gold auto trader. Our daily net equity for our ES auto trader. Also, there's a link there for a contact us page, and also there's a link there to sign up for a free trial to our live trading room. You can email us directly at info@rightlinetrading.com, and you can give us a call at 1-855-765-6681. So let me just drop this slide. Just make sure you can see the charts. All right, hold on. All right, I'm going to have to reshoot them. Hold on 1 second. And I'm just looking for my Russell chart, and then we're ready to go. Here we go. Okay. Now, I'm going to talk a lot about candlestick formations in relation to market structure and price action. But there are just a couple of things that I wanted to say preliminarily, and that is all of us as day traders are constantly looking for what I believe to be the the holy grail, which is that particular confluence of indicator signals, which when we see them flash for a blue dot long or a red dot short, is going to provide us with a really accurate precision entry such that we can become profitable at day trading. But I would really proffer to you that simply does not exist, and that what is the most important thing to note when we day trade is that market structure, price action, as defined by candlesticks, are the single most important component to day trading. And that if we just pay attention to, say, the first line of our three-line indicator is momentum, and the second line is order flow, and the third line is stochastic, and it assimilates data for multiple time frames. And if we just look when everything turns green and take a long, or just look for when everything turns red and take a short, we're going to wind up with a lot of losers. Because the most important thing is to look for market structure and price action as it sets up in relationship to candlesticks, and then we look to confirm our entry with our indicator analysis. So what I would like everyone to do is I know in many respects you've really been brought up on the notion that the indicators are the single most important component, and they're going to get you into the trades. But in fact, indicators, I think, only amount to 25%, and that price action, market structure, again, as defined by candlesticks, are really the key. And I'm going to show you today how important looking at candlestick formations, looking at patterns, and looking at price action are really the key to becoming a profitable day trader. Now, I look at in the morning in our live trading room, I look at 5 charts. And in just going over a lot of these price patterns, I I just came across so many that I was astounded. And it really takes a really significant amount of concentration. And you really have to review them over and over again because you can't miss them. Because these are the kind of signals that are really going to provide you with, I'm telling you, entries that are going to have a predictive value of close to 90%. Now, I'm going to assume that everybody understands exactly what a candlestick is. Now, you can trade with a number of different types of bars. You can trade with a time, you can trade with a tick, you can trade with a range. I just prefer to trade with a range simply because when the candle opens, I already know where the close to the upside is going to be and where the close to the downside is going to be. That's a personal preference, but I don't think that range bars necessarily confer any significant additional value above tick and above time, because all of them display price action and market structure in regard to candlesticks equally as well. The one chart that I think is really, I know a lot of people intuitively feel that Renko bars are really the right way to go, but I think that if you trade Renko, you cannot trade them profitably. And the reason is Renko charts obliterate market structure. And in fact, that's their purpose. Their purpose is to smooth out price action and to provide you with long periods where the market's trending up and long periods where the market's trending down. But what's going on inside each Renko bar has been totally wiped out. And that's the information that is absolutely necessary in order for you to take an effective trade. So it's my personal opinion that trading a Renko is really a mistake. But intuitively, they look great. When I look at a Renko chart and I see all those green candles in a row and all those reds, they look fabulous. But if you try to trade them and you look for the price patterns that I'm going to show you, you're going to see that you will not be able to find them. And that's the object of Renkos, to obliterate all this, what many people consider to be noise, but I would proffer to you is really the key to successful day trading. Now, I think that everybody knows, if you're a serious day trader, that in a candlestick, on a long candlestick, the body of the candle, the high is the open, the low of the body is the close, the low of the move is the low wick, and if there's a wick to the upside, that's the high of the move. Now, the size of the candle body itself is extremely important because it shows the conviction with which that buyers or sellers are pressing the price. And the one other thing that I want you to know is that there are a lot of people who have all these mystery indicators, and and they won't tell you how they work. But there are only 5 things that the market can tell you. There are 5 pieces of data only, and nothing else is available to any of us. And that is the open of any candle or any period, the close, the high, the low, and volume. That's it. Those parameters, these 5, are all the information that's available to any indicator. Now, market profile is a little bit more sophisticated. We use order flow. But these are, in a sense, doing nothing more than processing in a sophisticated way volume. So there is no magical indicator, no magic thing that people are going to try to sell you where they won't tell you how it works that can do anything, because it's a formula that has to use these 5 parameters. These are the only 5 parameters that are available to anyone on a trading chart. That's it. There's nothing else. And what a candlestick does is display really clearly 4 of them. The high of the move, or the open, the close, and the high and the low. And within each candle, we can tell what kind of buying conviction or selling conviction there is. When there's no wick, or the wick of the candle is really tiny, and it's a green candle to the upside, it shows that buyers are really in control, that buyers have moved the price from the open to the close with a tremendous amount of conviction. When you see a candle where there's a huge amount of wick, well, let me just find one here really quickly. That tells you that there's really a lot of indecision, and buyers and sellers are tugging at each other, and the direction that the market's going to take based on the power of these two are really, really unclear. And I'm looking for a doji, but I'm looking for any candle with a very small candle body, and of course I can't find it. But here, now this is and it's a modified form of a doji, and basically what this is telling you is that the candle opened here. And the candle closed here. And bulls tried to take price all the way up to here. Bears then drove it all the way back down, so that the open and the close are exactly the same. And there's absolutely zero buying, and that bears and bulls in this particular candle have equal strength. When you have a candle like this, you know that sellers opened the market here, and drove price all the way down to here. Now this is an 8-range chart, and they drove the candle all the way to the bottom of the range to form a new candle. So in this particular, for this particular range bar, sellers were really in control. Now sellers can go back and forth. This is why you have to look at patterns and not any single candlestick. And what I'm going to show you really are patterns made up of a series of candles. But that's really the core of what these patterns mean. And let me give you one example, and really the most rudimentary example, and then we'll go on. We'll go on from those to the more complex. Now what we do here at Right Line is we put a lot of weight in engulfing candles, and I want to give you a really good example of now, you can do this without our software. You don't need it. All our software does is mark these out for you. Well, Mark, I'm not trying to sell you the program. All I'm trying to do is show you the value of an engulfing candle. I mean, you're welcome. You don't have to stay if you don't think the information is useful. You have to be sarcastic. Now, let's take a look at this configuration. Now, price is moving to the downside. The one thing that you never want to do as a day trader is to chase the price, because if you do, you don't know where it is going to reverse on you. So the market makes a move to the downside, like this. And then, now you're clear, the things that whatever your software is, it's going to have to define for you the trend. because what you're looking for is a confirmed downtrend. You could use whatever lines you like. We use a 50 and we use a modified 15. But this is applicable to any software on any time frame using any type of bar like time tick or range. Now, we know that we're in a confirmed downtrend. And there are actually going to be two things here that you're going to see that I'm going to show you. Now, as the market moves down, you see it moves down with a tremendous amount of conviction. The sellers in these two candles have created huge candles, full bodies. But then buyers in this candle have turned the market up. So what you have to do, again, no matter what your trading is, you want to see if these buyers are going to be engulfed by a candle that reconfirms the trend. And it does. It's reconfirmed by this huge engulfing candle. Now, this is a small B. You can see that the buyers in B are weak. They didn't create a monstrous B with a huge body. They just created a small one. So this is an easy candle to engulf. But the engulfing candle itself is almost all candle body. There's no wick. So this is a great trade to take short one tick below the close of the candle. And that's going to take you down 7 ticks. It's not a huge trade, but it's going to get you, I would imagine, to a first target. But then watch what happens. And these are the kind of price patterns we look for. You have two candles that move up. Now, both of these candles, the bulls are in control, but they have very, very small candle bodies. And this is one of the most powerful signals you will ever see. This candle engulfs the prior two candles. And that shows there's tremendous power in these sellers. Now remember, when this candle engulfs these buyers, they're trapped. And so this move is going to be pushed down by two forces. One is going to be pushed down by the addition of new sellers, and by the fact that all of these buyers are going to get stopped out as the trade continues to the downside. And you can see this is the most powerful of the moves. And this is a big trade. Now, the only thing that you need in order to take a trade, it's a 20-tick trade. Now, the only thing you need to take a trade like this is, one, have two moving averages. We use a 50 and we call a modified 15-period moving average to confirm you're in a downtrend. And then when you're in a downtrend, you never chase the trade based on indicator confluence. You want the indicators to confirm what market structure is telling you via the candlesticks. This is a C engulfing candle. It shows you that you're going to trap all these buyers. Selling conviction is amazingly strong. It doesn't push down that far. It pushes down 7 ticks. But then the bulls make this very small move up. 2 candles, 2 small candle bodies. And I always look for an engulfing candle that engulfs the 2 previous candles. And that, now, if you go to most candlestick lectures, they go through slide after slide after slide where they show you a doji, a dark cloud cover, a shooting star. You know, you're going to get 20 of these candlestick patterns. They're pulled out of context, and they're simply shown to you in JPEG form, and they're told you what they mean. Well, you know, if you see a doji at the top of a move, you're likely to get a reversal. You know, if you see a dark cloud cover or you know, a shooting star at the top of a move, well, you're likely to get a reversal. I purposely didn't want to create those kind of JPEGs because when you pull them out of price action and market structure itself, they lose all their meaning. And that's why I want to take these trades right off of the chart to show you how successful they make your trading. Now, we use order flow and momentum as well, simply as the trend, to confirm our trade. You can see the candle is outlined in red. Here it's outlined in yellow. We know that we have order flow and momentum, but all they're doing is confirming the fact that this is an engulfing candle. We're trapping everyone in this candle. The buyers here. This is a short candle, trapping the buyers in two separate candles, both engulfing to the downside, and the downtrend is intact. And the one thing that you must do as a day trader, in my opinion, and this whole webinar I'm going to preface with, these are my opinions, is you cannot counter trend trade, although I'm going to show you candlestick patterns that make counter trend trading possible. But my suggestion is that because it's dangerous, that you do it with less contracts. And we're going to be doing our counter trend trading with one contract, and we take these trades with 3 contracts. So I'm just going to move over, because what I really did was mark out a large number of patterns, because I want you to see that they constantly recur. And I don't think this is the type of lecture or a webinar that you're ordinarily going to get. This is just very, very practical information. And everybody likes to talk to you about their indicators, but the indicators are of limited value if they're not taken in the context of market structure. And market structure, again, is defined by the candlesticks. So let me just roll over here to all the things that I have marked out to show you. Oh, yeah, I agree, David. Counter trend traders, I think, really get beaten up. And that's because the institutional traders set the trend, you know, the big guys, and you want to be on board with them. And that's the thing about taking those last trades. They've set the trend that you know the market's moving down. What you don't want to do is to get on board in the middle of the move. That could be exactly where the B candle comes, stops you out. Then you get an engulfing candle, which confirms the downtrend. You've already been beaten up on the trade. You have to wait for a safe place to enter. Now, here's another pattern. I'm just going to take these at random, because and you're going to equal power. And what happens when the bears and the bulls have equal power? We call the market to be consolidating. Now, that's a completely different term than chop. Chop is where the market's all over the place, and I could show you tons of chop. You know, there's 2 candles up, 3 candles down, 4 up, 2 down, 1 up, 5 down. That's chop. This market is consolidating. It's simply moving sideways. Now, this is one of the most common patterns that you're going to see on a chart, no matter what you trade. Again, time, tick, or range. You're going to see consolidating patterns that move laterally. Now, whatever moving average you use, you're going to see that during these periods of consolidation, the moving average is going to continue to fall. And you ask yourself, why is the moving average falling when price isn't falling? I mean, from the period here to the period here, price it's only moved 10 ticks, which is very little. This is an 8 range chart, but yet it's an 8 range. But for some reason, this moving average has rolled over and come all the way down on sideways price action. Now, the only question you have to ask yourself when you see this pattern, and I'm going to show it to you over and over and over again, and you have to really focus on the chart and really have just a lot of discipline, because you're going to see this happen, I'm telling you, 5, 6, 7, 8 times a day, is decide for yourself which direction do you think that the market's going to break. And it's really, really rather simple. It's going to break in the direction of the trend. So if we take this out, and we take this out, and we take this out, everything out, the question is, where is the place where it's most likely to break? Now, it may break to the downside here, but it's most likely to break to the downside when it hits right up against your moving average. Now, this is resistance. It's got to push through that moving average to make it to the upside. So as you get consolidation into a moving average, and that's what we look for all day, are price patterns like this. We know that when this candle, and you can see this candle engulfs this candle, and it's now pushed itself right into the moving average. And what's happened here? This is simply a period, if you could coalesce this into one huge candle, this is a period of time where the bulls and the bears have absolutely equal power. There is no one set of traders who are dominant. The question is, and it almost always breaks in the direction of the trend, and it almost always breaks directly off the moving average. Now, if sometimes you get a little impatient and you decide that it's going to come out of consolidation here, this candle engulfed this candle. Now, if you're a little impatient, the high of this candle is 85. The high of this candle is 84. So you're not going to get stopped out. If you took this trade, you'd still be in for this entire move to the downside, which is a gigantic move. But that's what happens when markets break out of consolidation. When they break out of chop, you don't have any idea which way they're going to go. You have to let them break, wait and see which direction they're going to go, and I'm going to show you those. But this is really all based on market structure, as you can see, price action, and candlestick patterns. So you have two opportunities, two places here to go short. Here, this candle engulfs this candle. If you go, successful. Or this candle. If you took this candle, it's because you don't think this candle is going to form. Remember, you don't have a crystal ball. And that right edge of the chart is the most difficult part of the chart to trade. Now, we have many, many other things. This background bias tells us that price action and market structure on 2 higher time frames are down. But this candle and this candle are very similar. You have order flow and momentum with you, candles outlined in yellow. You know this trade's going to break to the downside. The only question is when. Either one of these trades would have given you a successful 25-tick trade. Now here's another pattern. It is the break, the retest, and the move up. And we see this also a lot. Now, this candle breaks a trend line. Any 2/3 candle body break of a trend line can give you the opportunity to take a long. The only question is do you want to chase the trade? What we do is we wait for the break and then the retracement, and then the confirmation up. And although this candle doesn't engulf this candle, you can see that this candle is 8 ticks of buying conviction. If this was a candle with a tiny candle body and a big wick, I wouldn't consider that to be a successful retest and a move up. I would stand aside, especially since you have to assume that the move is going to break the pivot. But what you want to do anytime there's a break of a trend line is you want the trend line to break, let it go. Don't try to chase it. And all of these systems that give you these anticipatory momentum breakout systems are going to tell you to chase this trade up. They've got 3 green candles, whatever their average true range is. They're going to put in a long here, and you're going to get beaten right up. You let it go. And you know what? Sometimes it goes right into the sky. It never retraces and never gives you the opportunity to get in on a retracement and a retest and a move up. Those are the moves that you just let go. Because when you trade with specificity and you're looking for specific patterns, you have to make the market come to you. You can't go after the market. If it doesn't give you the pattern, the price pattern that you want, with the kind of confirmation that you want, with this big candle body, after the break, the move back, which retests, and then the move up, just don't take the move. And we get big moves that are of 25, 30, 40 ticks that we don't chase because we can't get in them. This will be on video. You can review it. I just want to show you the patterns that I marked out because I have so many of them. Here's another one. And remember, this looks a lot like the move that I just, you know what, I think that's the one move I just showed you. Let me keep going here. Here it is again. Sideways movement. Just like that. It's 1, 2, 3, 4, 5 candles, all moving sideways. Now this is a nice period of consolidation. Now you could have chased the trade up, but that's risky. We're going to wait for it to stop and consolidate laterally. Now you could have taken the long here, or you could take the long here. Obviously, this is the place you want to take the long. It's fairly close to the 15-period moving average. And here's the other thing that I want you to see. What does this candle just about do that I told you was really powerful? It's 1 tick away from engulfing the previous 2 candles, which tells you how much power there is that the bulls demonstrate in this particular move. Now you would be in 1 tick above the close, and it just shows you the next candle gives you a lot of heat. All of a sudden the bears come back with a vengeance, but they are not strong enough to pull this trade back, and the trade goes up. And you've got yourself another big winner. And if you, tonight, take a look at these trades, you will be very hard-pressed to find a loser. That's a 41-tick trade. You get 1 or 2 of those a day, and you're going to make a lot of money as a day trader. Now let me show you a couple of other. Here it is again. This is such an important pattern that I really, really wanted to kind of, let me see. The red and blue dot lines. You mean the background color or these dots? John? I'm not sure what you mean by the dotted lines moving through. The dotted lines are pivots. The dots, I'm not really going to go into them. We call them our chase dots. And I'll just go over briefly. It's a little bit off topic, but I'll tell you what they are. But what I want you to focus on, though, is this. This is a really, really exactly, David. One tick above the candle is your buy stop or your buy stop limit. What we do in the room is we have the one tick above triggers the trade, and then we take a one tick pullback, which we configure with a special tool that we have, and I can show you really briefly. Now, this is a tremendously powerful sideways price action movement. This market is consolidating, and what I love about it is look at the 15 period. Look at the modified 15. It is just going up and up and up as price action moves sideways. So it tells you that the market is going to break to the upside. The background bias is green, which tells you that price action and market structure, as we're defining on our trading chart, as defined in up and higher time frames, is calling along. The 50's up. The modified 15 is up. And this candle has order flow and momentum with it from multiple time frames. This is a winning trade. All you've got to do is see it. You put your buy stop or your buy stop limit, whatever trade you want to do. You want to get into this trade long at the close of this candle, and you're going to take it up for 17 ticks. We are, Dave. We're putting the buy stop and the sell stops above and below. If we want to go long, our buy stop limit is one tick above the close of the candle. We're going short. Our sell stop limit is one tick below the close. Now, what these dots are, I didn't want to get into it, but I'll just tell you really briefly, is the software is predicting, let's say you didn't get this trade. This is a great trade. And you only take these dots when you miss a great trade. And what it tells you is that the likelihood of chasing this trade to the upside is still really good to give you at least a first target. So if you miss this entry, which you shouldn't have, but you enter here, you're still going to get yourself 11 ticks. Now, this is not a great entry because you're way overbought here. And we have an MA diff, which defines overbought, oversold. This is your optimal entry. Here's your perfect entry. You know, if you go to the bathroom, something happens, you look down, you miss it, that dot tells you you can chase it up. Now, here's a retest. Here's a break. I didn't even mark it in, but I see it. There's the move down. There's the retest. And look what happens. This short is coming with 7 ticks of candle confirmation to the short side. It's a huge engulfing candle, engulfing a pretty big counter trend B candle. And down you go. It looks like it's about a 9-tick trade. Then here, I didn't even see these, but the more you look, the more they come. Here is your bread and butter trade. This candle, whoops, wrong. And what you're going to see when you start looking for these is they keep happening over and over and over again. Is that this candle, which comes right off of resistance, and is confirmed by order flow and momentum, what does it do to the previous 2 candles? It engulfs them both. And remember, that's one of the strongest patterns you can see. A, you get an engulfing candle with 7 ticks of candle body. Tremendous selling power here. And these 2 wimpy candles, one with a candlestick with 1 candle body of buying power. This is a It's a hammer, and which is again a modified doji, shows that the bears and the bulls are equally in control. And in fact, this is another pattern where the move up wanes in power. Now you didn't have a lot of bulls doing much on this trade, but then when you get to this trade, you don't even have any candle body at all. Then this engulfs the trade, and bam. I'm telling you, these trades are really, when you see them, this is where you take your money to the bank. It's 15 ticks. Now, it's confirmed. You only look to your indicators to confirm what you already see based on market structure. You're taking it right off of resistance on a short. You've got a big candle with a huge body engulfing the previous two candles. So you know you got a great trade. Well, do you have order flow, stochastic, and momentum with you? You just look at the cup, see if the candles surround it. You do. So indicators confirm market structure, price action, size of the candle body, and down you go. And these happen over and over again. I have outlined a few of them. And I tried to what I did was I outlined a couple that failed. Because I don't want you to think these always work. But here's another great, and I'm just going through the chart. There's your break. Do you chase it up? No. You wait for the retest of the 15. The 15 holds. The move up. Now this doesn't have the kind of set of buying conviction you might want. So this is a discretionary trade, and it's really up to you whether you want to take it. This is a trade I did take in the room, and it went 34 ticks. I love the trades that break a trend line, come back, and then retest the trend line and hold. And it moves up with order flow and momentum. I'm in one tick above the candle, and up I go. And that was a 34 tick trade. Now you can see them happening all again and again and again. Now this is a really, really nice pattern that I want you to see. It's a break of the 50. Now it's always, I think, a big question when price breaks a trend line. Again, how do you trade the trend line in a very conservative way? If you simply chase the market through the trend line, you're going to get beaten up. And you would have gotten beaten up here. You would need a 10 to 12 tick stop on an 8-range trade in order to stay in this trade. And that's a big stop. So what you do is you let the market break. Then you want it to come right back to resistance, retest the 50. And when it does, it heads back down with a huge engulfing candle. It engulfs the previous candle. Order flow and momentum are with the trade. The 15's down, the 50's down, so you know you're with the trend, and you've got yourself a really nice short trade. Don't chase the trade through the initial break. Now what's going to happen on some trades is the market's going to break and go straight down. And you're going to say, God, I'm almighty. I wanted to be in that trade. Well, you know what? You can't be in that trade because there's no conservative way of taking that trade to the downside and being absolutely sure that you're not going to get a B and then a reconfirmation, or you're not going to get a B and the market's just going to go right back up. This is the only way to be sure with a 90% predictive value. Let it break, let it retrace and retest the 50 to the upside. It can't break it, and it comes down and engulfs the move that tries to push it up through the 50. That was a loss I took, trading right into an unbroken pivot. See, this is the kind of move you want to be in, but you can't get it. It breaks the 50. The 50's falling. It's red. And there's no retracement. But at any time when you're on the right edge, it could come right back, start consolidating, sideways, come back to support, to retest, and you don't know that. So you just can't chase these trades. Now, eventually you get a C, but it's way off support, and it's way overbought. So you can't take this entire move. And if you want to be in all of these, you're going to have a problem trading. Because the market hasn't come to you, you're going after the market. Let me see if I have any more here. I have a bunch on the Russell chart that I wanted to go over with you. This is a 37-tick move, and I think I took it today. Here's the move up. Here's the retest. And this candle comes right off the 50, engulfs the B. That was what I was looking for. I was looking for an engulfing candle. And when they engulf right off the 50 to the upside, and the 15 is with you, up they go. And that was a 37-tick trade, of which I got a huge piece of this. I obviously don't know what to get out at the top, but we got a major piece of this 37-tick move. I didn't chase the trade on the first break, and this B does break the 50. I let it come back, and then I got the move up. $17 ticks. Move down, retest, and down it went for 17. This was 10. Same trade. Down, it retested the 50 again. I didn't chase it down on this break, straight down. I let it form the B, I let the B get engulfed, and down it went. And I got 10 ticks out of the trade. This was a trade I didn't take. Move up, retest, and the reason I didn't was I didn't have indicator confirmation. I didn't have order flow and momentum. See, the candle's not encircled in yellow or red. So since I didn't have indicator confirmation, I did not take it. But I want you to see the pattern, because the pattern in that case, and there it is again. Break of the 50, retest of the 50 to the upside, didn't break it, it comes down, engulfs the B, and down you go. And this is all based on market structure and the fact that and the engulfing candle and your knowledge that you're in a downtrend. The 15's down. In this case, the 50 was yellow, which is good enough to take a trade. You would not take a trade on a green 50, but you would on a yellow 50. Because the yellow is only plus or minus 1%. So it's relatively flat. And the 50 is a marker of momentum. And as long as the momentum is flat and not going against you, this is still a great trade. Correct, David. The 50 can be yellow. You're short 1 tick below the close of the candle. You must let the candle close. You cannot trade intra-candle. You're in right here. Now it gives you some heat. I mean, I thought this was the last trade I took this afternoon. I mean, it came all the way back and tested the 50 again. But the thing was, it could not break the 50. And the reason was, look at the 15. The 15 never flinched. And even though I had 7 or 8 ticks of heat on the trade, bam, down it went for 24. So let me open up the Russell That's really, really nice. And you're going to see that basically it's the same pattern. And if you just get these same patterns down, they're going to really, really net you a nice amount of money. Here's the same pattern again. I'm going to take it out of this box. It's the move up, retest the 50, 50's up, 15's up, order flow and momentum give you your indicator confirmation. You're in one tick above the close. And you don't need my 3-line to trade this. You can use your own momentum indicator, your own volume indicator. You simply want volume to confirm your trade to the upside, and you simply want momentum to confirm your trade to the upside. That's your indicator confirmation of market structure on the second retest. And up you go. And I can't see how many ticks we got, but we got a lot of ticks on that trade. Now here's the sideways consolidation pattern. And you can see, I don't need to show you a lot of different patterns. I just need to show you a couple of repeated, really successful patterns. Now, you have to have patience and wait until the candle hits right into the 15, and you'll like to get an engulfing candle. That's exactly what you got right here. Now, it's not a huge trade to the downside, but it's a breakout of consolidation. It's a 12-tick trade, and you know the breakout's going to occur to the downside. The 15 is heading down. Eventually get background bias that tells you that market structure and price action are to the downside on multiple higher time frames. Everything is telling you you would never take a long trade here. And all you're doing is waiting for that sideways action and the confirmation down with an engulfer. And you get it, and down you go. Now here's a trade we can't get. It's a big trade. You want to be in on it. It doesn't retrace. No consolidation period. We just can't take it. We're not in. Now, I was talking about reversal patterns. Reversal patterns are very, very risky. And I really don't like to trade them. I like to trend trade, and these are counter trend trades. But if you do want to counter trend trade, what I recommend that you do is you always take the trade off of a pivot. And you take it off of a major pivot, not a minor swing pivot. And what you must have on the reversal is you must have this pattern. The move to the downside must engulf the previous candle. And the candle itself must show a tremendous amount of buying or selling conviction. This cannot be a wimpy candle. It's got to be a big candle. And because it's being taken off support here to the upside, and it pushes off support, and it's a huge candle, and it engulfs the previous candle, almost the previous two, but not quite, that would be your counter trend short. Like I said, they're very dangerous trades. You're in one tick below, and it will give you a 13-tick trade. And you have the same thing happen again right here. Only this is even a stronger counter trend trade because you've got this candle right off of support engulfing the previous two. And that's always a very, very strong move and shows you that here is where the bears are in mega control. And if you took this trade, you'd be down for 13 ticks. Now, here's a trade I wanted to show you where the trade failed. You had a move to the downside. There's your retest. And you expect the trade to go down. Background bias, 50 is yellow, 15 is red, confirmation with order flow and momentum. Now, the only thing wrong with this move to the downside is the candle's not engulfing, but if you look at the candle itself, it's got a significant amount of candle body. So this could be a trade where you took a loser. On the break, retracement, retest of resistance to the upside, it fails. Order flow and momentum confirm, background bias confirm, and you go nowhere. Here's another reversal. Key is you're taking it off for resistance to the, or support. Does support, holds, turns the trade, and the key is that you're taking an engulfing candle. Right here. Okay. Now let me just go through these really quickly because I'm going on an hour and I don't want to talk into the ground. There's the retest, the move up, the move back right into the 15 and the 50. These are not big trades, but they are very successful trades. Break, retest to the 50, move up. This candle engulfs the previous candle. This engulfs it. Order flow and momentum confirm, and up you go. Now this is a mega trade. Now it occurred, I don't know, at some place in the morning, but there's the break. There's the retest of the 50. You've got the 15 down. The 50 is rolling. Order flow and momentum confirm. And I don't know, this is a whoops. That's a gigantic trade. And these are very successful trades. 39 ticks. Now these are two trades I took in the room. 9 ticks, 18 ticks. Same thing. This candle came back, retested, headed down, and engulfed the previous candle. This candle engulfed the previous candle. You had your break, retest to the 15, and the continuation on an engulfing candle. Continuation on an engulfing candle. 9 ticks and 18 ticks, bang, bang. And here's the same thing. I'm telling you, if you just watch for these, the break of the 50, the retest. Now the move up should be on an engulfing candle. And that engulfing candle should be a real juicy candle with a lot of candle body. And kaboom, up you go. And that's another huge trade. Now, if you sit and you just wait for these, and you have the patience and the discipline, you're going to make money off of them. And the nice thing about this trade, I love this trade, you also have a little bit of consolidation here. So not only does it break and slowly drift back into the 50, and the 15 never hesitates. Up it rolls. I mean, and it's pushing really hard up, despite the fact that price is sideways. And you just know this is going to go up. Now, I wanted to show this pattern. Here's the bull candle to push up. Then you get another bullish candle, but look what's happening to the candle body. It's disintegrating. The power of the bulls here is waning. Now, this is a tough short. One, you don't have order flow and momentum confirming it, and it's a small candle body. Even though it does engulf this candle. Oops. But the fact that you got a lot of bulls here and not too much bulls there, and these sellers right off resistance engulf this, you don't even need indicator confirmation. You don't have order flow momentum with you. It does not matter. This is a structural trade off of a trend line based on the fact that you were simply engulfing all the previous buyers, and you have 2 candles to show you that the power of the bulls is slowly evaporating. And that's a 42-tick trade. Now, if you get this on 3 contracts, we take one off at 6, one off at 11, and one off at 30. That's just under a $500 trade. You're done for the day. Now, I'm just going to show you one more, and then I'll see if there are any questions. It's, again, here it is. Patience, patience, patience. Sideways action. You want to take it right off the modified 15. All sideways action. And the 15 never stops. Just keeps heading up. And up you go. Now this is a break, a retest. It happens again though. It breaks, it retests, but doesn't stop you out, and it goes down for 7. And there it is again. Sideways action, up you go. Sideways action, down you go. Sideways action, down you go. This is a huge period of consolidation, but you know this is going to break to the downside. You got to wait for the 15 to turn red and the 50 to turn red. The 50 is already red. There you go. You're in right here. It's a breakout of consolidation. Retest. Comes down, holds, goes up, retests, and up you go. Now you could have chased it here. You would have been okay. But you're better off waiting for the retest. So this is where I'm going to stop because I've been going an hour. David, this is just a 50-period simple moving average. We just took it out of NinjaTrader, and the only thing that we changed on it is we gave it a slope degree, and we gave it a color. It's nothing. It's no magic moving average. This is a proprietary trend line. It's a 15-period. We call it our right line trend. It's very helpful for us because we never trade when it's yellow. That's when there's a period of chop. Now this is chop. This isn't consolidation. I mean, this is above the 15, below the 15. Above the 15, this is a mess. And you don't have any background bias. This is something you just don't trade. So that's really about, well, it's not available. Thank you. I appreciate it. It's not, it's available on our platform. It's not available as a standalone. I'm sorry. I mean, we don't break it apart, and I'm not, but if you send us an email, we might consider just letting you have the one line, and just charge us something very nominal for it because we really want to help you guys out. So we can try that. And listen, you're all welcome to come into the room. We made $690 in the room today. Let me just show you really, really quickly, and then we're going to be done. I took way too many trades today, and I'll just show you. I mean, trading the market is not easy. Let me find my... Now, the one thing we do in the room that really sets us apart is if we don't get a one-tick pullback on the trade, we don't book the trade because we need that one-tick pullback to get everyone in the room into the trade. Where's it, Leo? Oh, I put it on natural gas. Hold on one second. Here it is. I mean, normally we don't take this many trades in a week, but today I had 14 trades. And I'm not going to hide anything from you. I had 9 winners and 5 losers. I had a 37-tick winner on crude, one contract off at 6, one at 11, one at 15. Then I had a 17 tick trade on crude. One contract off at 6, one at 11, one at 13. Then I had a 10 tick trade on crude. One at 6 and two at 1 tick. Then I had 24 tick trade on crude. One off at 6, one off at 11, and one off at 15. Then I took 3 losers. Then I had an 8 tick trade where we didn't get a pullback, and we don't book those trades, but there was a winner. Then I had a 16 tick winner without a pullback. We didn't book that. Then on gold, I had a 16 tick trade, one at 6, one at 11, one at 13. Russell had a 21, one at 6, one at 11, one at 13. Then I took 2 really stupid losers. Then I had a 17 ticks, no pullback. We don't book it. We didn't get that 1 tick of wick to get everyone in the room in the trade. We don't take it. The natural gas, I had 11, one at 6, one at 11, and one at 3. Then on the ES, I had 2 winners. Net ticks were 100. Net equity was $690. Auto Trader had 1 trade and 1 winner for $300. So that's how we did today. It was a rugged day, but we made almost $700. What can I say? Gave me a migraine headache, and I had, I had paralysis in my right arm. But we traded through a lot of difficulty, and I had 3 winners I couldn't book. So that's it. Thank you, Art. Nice to see you in the room. We're using a special ATM. We take 1 contract off at target 1, which is 5, which becomes 6 with the pullback. 1 off at target 2, which is 11, 10, which becomes 1 tick, what becomes 11 with the 1 tick pullback. Then our 3rd contract is on a runner that we take off on a reversal candle. Now I'll just show you in 30 seconds. This is the platform we trade off of. It's our own. We've already submitted it for a patent. What we want to do is we want to buy on an up close. We hit this button. We want to sell on a down close. We hit that button. And let's say we're moving to the upside, and we want to close on a reversal. We just hit close on a down close. If we want a down move and we want to close on a reversal candle, we hit close on an up close. So this platform really gives us an enormous amount of, and what we put a 1 here for a pullback. So the trade will trigger 1 tick below, and then it must pull back to execute. And that's the trading platform we use. And that's attached to Ninja. Can't be used in isolation. So listen, everyone. I hope to see you in the trading room. Leo, could you put the link in there? We're going to put the link in for the. We're going to put the link in there for the sign up. You're welcome to come in, for a free trial, and watch us get those sideways consolidation patterns and those retests. Hold on 1 second. We're going to put the link in. And listen, I appreciate everybody, coming in. And if you have any questions, feel free to give us a call. We're always here. We kind of live here in the office. We've been camping here for a year. All the employees are handcuffed. Okay, Leo's going to put in the. Okay, that's the link for the free trial. Tomorrow's Friday, so we probably won't put you in on Friday. We'll put everybody in who signs up on Monday morning, and you can be in the whole week. We'll let you watch us trade for 5 days. All right, everyone, have a great afternoon. Thank you so much for coming. Give me a call anytime.